A big welcome to everybody today on our webinar hosted by CubeMatch. For anybody who doesn't know CubeMatch is a global change and transformation consultancy focusing primarily on the financial institutions with our team of highly experienced. We have a team of probably now 400 plus consultants globally. So just to introduce myself, Keith Moran. I am our Group CTO, Chief Technology Officer, and one of the key areas under our practice is RegTech, or regulatory technology. In that space, we've several ongoing projects in SFTR, Security Finance Trade Regulations, EMIR, MIFID, supporting new hedge funds being created, etc. But obviously a key part of that now is DORA, the Digital Operation Resiliency Act, where we've several in-flight projects. So I'm delighted to be joined today by Keith Blizzard and Daniel Crawley, two industry experts on our webinar, which is a critical path for compliance in the next 7 months. So I will hand over to Keith Blizzard first, or Keith B as I call him, to avoid any confusion, to introduce himself, and then I'll hand over to Daniel.
Brilliant. Thanks very much. Welcome, everyone. Thank you very much for the opportunity. Quick introduction from me. So my background is financial services. I work for a company called Johnson Hannah. We are what we call an alternative legal solutions provider, by which we mean we take a kind of non-traditional approach to law, which includes things like, for example, enhanced use of technology, particularly for large-scale projects such as this DORA one. So I'm Johnson Hannah's DORA lead. I also look after the EU's wider digital strategy regulatory program as well. And my background is in large EU regulatory projects. So I've done things like the EMIR derivatives margin reform, the liable transition, Brexit, and so on. And today, what I'll be talking about mostly is the kind of the legal and the regulatory side of the DORA program.
Thanks, Keith. Daniel.
Good afternoon. Daniel Crawley. Originally a Brit. I was born in London, but I've lived for the last 30 years in the Netherlands. 25 of those years I've worked for financial companies here in the Netherlands, predominantly banks. And I'm currently working for a small Dutch sustainable bank here in the Netherlands, who have also got branches in Spain, in Belgium, in Germany, and they've also got a what is now a subsidiary in Bristol. I was also the so my background is I did a lot of projects and a lot of management, and now I've decided to just concentrate on big complex programs. And that's what I'm doing here at the moment in the Netherlands. And what I also did for the same organisation here was I was the Brexit program manager for them back in 2016 to 19. So I'm one of the few people, I think, in the Netherlands that successfully applied for a British banking licence, and I've also had quite a lot of exposure and experience with the British PRA and FCA from that project.
Brilliant, Daniel, and great to be joined by both yourself and Keith Blizzard here today. I guess just to kick off the conversation, we've all had kind of many conversations on DORA, etc. And the ESRB, the European Systemic Risk Board, in a recent report noted that there's approximately 22,000 financial institutions in scope for DORA, right? And I think that figure has surprised quite a lot of people. We do know January the 19th, 2025 is the date to be regulatory compliant from a DORA perspective. And given we're 7 months away, I guess the key question now that all our customers and clients are asking us, and indeed numerous other financial institutions are asking us that key question. We're 7 months away. We're coming into the summer. You know, people are away, etc. And I guess over to you, Keith B, first, right? What are the critical steps to ensure compliance from a DORA perspective, given we're on a 28-week, 7-month window to make sure that we're compliant across all the articles, which are not insignificant? Be good to get your views on it.
It's when you put it like that, it's quite scary, isn't it? But the regulation, to be fair, has been in final form and available now for a good period of time. What we are missing, though, is some of the level 2 regulation, the regulatory technical standards and so on, that fill in some of the gaps and some of the detail. Our view has always been that there's probably enough for everyone to get on with the work and then absorb those as they come in. Probably more crucial to this is to think about this really as a gap analysis project effectively, because there's quite a lot of regulation already out there, whether it's regulation guidance, industry guidance across different jurisdictions and different regulatory bodies that already covers a lot of this material. But I've said before that DORA is kind of like for the first time, it's the blanket that covers the entire bed, and it replaces what was previously a patchwork of requirements on cybersecurity, operational resilience, and associated matters like this. There are 3 key work streams as I see it. The first one is to create your risk management framework, which is your policies, your procedures, your protocols on how you handle digital operational resilience. And that's the document that you're going to write, you're going to follow, and when something goes wrong, you're going to implement. And then under the principles of operational resilience, once you've dealt with a situation, you then go back and improve, identify, patch the gaps, etc., etc. So that is going to be your Bible, for want of a better word. The second piece then is you're going to regulate your activities with your third-party ICT service providers by way of the legal agreements that you have with them. So your suppliers, whether they're your central platform that you're buying, your cloud providers, your cyber resilience software, these kind of people, there are mandatory contract terms which need to go into those agreements. And actually, drawing on my experience of previous EU regulations, I think when I hear people say that's probably going to be one of the toughest challenges, I think that's absolutely right. Daniel will talk more to the third work stream as I see it, which I sometimes call the jam in the sandwich between the contracts and the risk management framework. And that essentially is your operational environment, your IT operation environment, your infrastructure, your configuration. And essentially what you're looking to do is to make sure that what you're saying in your risk management framework and what you're documenting in your third-party contracts is actually happening on the ground in your operational environment. And whether that's things like backup policies and cyber risk detection and so on, incident alerts, report generation and so on, actually that is happening. So that's quite a busy work stream for the IT professionals in your organization. What I mentioned was working from a gap analysis, and I've heard a lot of clients have done this. The key to delivering within 7 months is to build on what you're already doing that matches the DORA requirements, because I think that's the only way you're going to do it. And when you look across the different regulations, I can give you an example of the European Banking Authority guidelines on outsourcing. When you look at what they say you have to have in a contract, it's a good correlation to what DORA says you have to have in a contract, right? So if you're already compliant with that document, you're actually X% of the way to being compliant for DORA purposes. And there's quite a lot of regulation out there that will give you that lift before you've even done anything, because actually you're pretty much compliant. But there is a bit of a caveat to this. Nothing is straightforward. In my mind, when I think of DORA, I always think of the Venn diagrams, the 2 circles kind of overlapping. And there's quite a lot in the middle of the 2 overlapping circles, but there's no such thing as 2 circles which fit perfectly. There's no regulation that fits perfectly with DORA regulations. They all are overlapping with stuff on either side that you have to deal with. There are 3 sort of key things to think about when you look at a set of regulations you're already compliant and you're comparing them to DORA. And the first one is actually what's the subject matter? Because I mentioned there the EBA's guidelines on outsourcing are really helpful because they're very similar to DORA's requirements on contracts, for example. But actually outsourcing and ICT, which is the subject matter of DORA, are not the same thing. And so what you might find is you have some contracts which fit in your Venn diagram between the 2 circles, and you don't have to do too much work to make them compliant, but you're going to have an awful lot that fall outside. So we see things like the UK OpRes talks about operational resilience generally. The regulations on outsourcing, none of them are the same exactly as ICT. So the first problem is subject matter. The second problem is the scope. So a lot of current regulations only apply, for example, to critical, important, significant, or material parts of the business. What that means in practice is you're doing that good for some stuff, but you won't be doing all of it for DORA. And the third level that you have to think about is detail. When you actually look at the regulatory provision or the provision of the guidance that says you need to do this, and you realize that's quite similar to DORA, is there some devil in the detail? Because, for example, DORA will take a provision that you're already familiar with, but also may add an extra line or two that you're not currently doing. So it's giving you something else to do. Or there may be a few sort of changes. It may be relatively minor. You may have your legal people look at it and go, do you know what? Substantially, they're saying the same thing. We're already doing it. That's a nice green tick. So the gap analysis is essential because if you can identify what's already good and deal with what is missing, that's how you're going to get to compliance within the 7 months. We can also look at the risk-based approach, and I'll just finish on this thought as well. DORA does give you a risk-based approach, which means that you have flexibility to apply the DORA regulations to the risks that your business see in the ICT space. And it does allow you to apply proportionality principles. And what that means is that the small investment firm or the insurance broker doesn't have to comply to the same extent as a global bank. So if you can leverage these, that's your best chance of success over the next 7 months.
Yeah, no, Keith, really, some really good advice there, particularly about being pragmatic, right, in terms of scope. And I guess, Daniel, Keith also mentioned, the risk management and governance framework, which is a critical pillar of DORA, the underlying policies and procedures across all your critical business processes and services. And I guess, Daniel, there's two things I want to ask you about. Number one, we had a good conversation the other day where I think it was the Dutch Central Bank, and it really relates to Article 8 in DORA about scope. Whereby there was a conversation where two organizations, financial institutions of relatively similar sizes, and they were talking about the scope of critical business processes. One organization had identified 30 critical business processes, and the other had identified 1,200 critical business processes, right? And we see this all the time with organizations, but that's a big variance. From an IT perspective, Daniel, can you just reflect or share your experience in terms of identifying that scope? Because we are getting a lot of clients asking us that question. Keith mentioned that it's not a perfect circle. You could be compliant to the NIST security framework in the US or different legislations, but we know that there's a gap, right? So none of our clients, as far as I've seen, and we've spoken to many at this stage, are more than, I would say, probably a 65, 70% fit, right? And some are way down the line. What's the best way to kind of identify that scope, Daniel?
Yeah. Thanks, Keith. And I think that I think a lot of what Keith B said also is very relevant when you're trying to determine your scope and when you're actually approaching the problem as the problem that's to be solved. The organisation that I work in, as I said, has a subsidiary in Bristol. So there's a project running there for operational resilience, but the Bristol subsidiary uses the IT systems from Group here in the Netherlands. So we've got a very interesting situation here where we've got an OpRes project program running in the UK, and we've got a DORA program running for the Netherlands and for the other European branches. And I think that keeping it simple, and I think, and also what Keith was also saying is leveraging what you've already got. We're not talking about a green field or a clean slate here. There is a lot of work in any self-respecting financial institution that's being regulated by one of the regulators within Europe. There'll be a lot of work that's already been done, and I like the idea of exactly what Keith B said about the gap analysis. That's a really good place to start. So what we did is on the European side, on the DORA side, we were looking at the critical and important functions, and on the UK side, they were looking at the important business services and their tolerances. And what we did is we looked at our critical and important functions separately from the IBS, and it was, okay, you do yours, we'll do ours, and then we'll come back and we'll compare. And luckily, we came to the same sort of granularity. So on the European side, we had 14 critical and important functions. There's also an investment manager within the organization. So they had another 9, and that's mainly to do with trading. And also on the IBS side for the UK side, they also had 9 or 10 IBSs. We were warned by somebody with a little bit of experience. We have a very good risk manager here who's from New Zealand, and they tried to do it. The New Zealand PRA they're slightly ahead of the curve in terms of rolling stuff out, and she gave us a really good warning: don't go too deep. If you go too deep, you will wrap yourself up in all kinds of problems. She said we were doing work in New Zealand, in Auckland, and after 1.5 years, we had to throw it all away and start again because we just went so deep. I have a sneaking suspicion that the organisation that's identified more than 1,200 SIFs is probably going to run up against a similar situation. So that was so in terms of how to approach this is reuse what you've got, keep it simple, choose a level of granularity when you're looking at your critical and important functions, and then and also looking at the important business services. And I think the things, speaking also to what Keith B has said is, if you're going to concentrate in the next 7 months, what's the kind of work that you need to get done? Risk management framework, very important. The situation that we had here, we had 80-90% of a decent risk management framework. Did need to have the gap analysis, did need to be compared to what the new requirements were there, but it's a lot of work, but it wasn't that much. It wasn't too complicated. Once you've got your critical and important functions and your important business services, if you're in an organization that's got to do both, there's a lot of commonality in there. If you've got an organization in Europe and one in the UK, and you come out with either a completely different set of IBSs and SIFs or a completely different number, then you need to go back and have a look at it again, particularly as the situation that we've got is where the group is supporting the UK branch. The real big challenge is the third-party provider register. DORA says that all processes supported by ICT and all the vendors who are supplying ICT systems have got to be identified and categorized. That's a huge amount of work. So you've got to do all in Europe, you've got to do all the ICT related. On the IBS side, on the UK side, on the operational resilience side, it goes even broader, it goes even wider. It's not just ICT third parties, it's premises, processes, people, and data. So again, what we've decided to do is to first look at the third-party providers who are supporting the critical and important functions and the IBSs. So identify your most critical suppliers and make sure that you've got a register of those. Once you've done that, so once you've got your important business services and the critical important functions, and you know what your third-party suppliers are, that's when you can start identifying your information assets. So then you can start mapping out what your the stack of information assets, and then that support the different processes. And yeah, there's not much tooling out there at the moment apart from Excel and PowerPoint to be able to support this. And we're also looking to leverage the service management tooling that we've already got. So we've got tooling where Jira and other simple tools that have been used to identify and to document all of the critical and important functions. And we've been reusing that. Once you've got your CIFs, your register, you know what your ICT assets are. A really important thing, and I think this is one of the things that the regulators are going to be looking for, is have you tested it? So on the operational resilience side, it's identifying vulnerabilities and then doing scenario testing, particularly on your IBSs, and on the DORA side, it's doing the threat-led penetration testing, making sure that you've gone at least one round before January for DORA and March for operational resilience, making sure that you've gone through and you've at least tested the most important aspects of your processes, and also of your IT stack. One of the things that we've also leveraged, leveraging stuff that's already there. We've got an incident reporting process, so we know if there's a P1, we've got an incident reporting process. We're leveraging that. We now know that we're going to have to cybersecurity issues and incidents. We're going to have to report those up to the central bank in the Netherlands. And what we're doing is we're reusing the PSD reporting line. So there's already a whole reporting line that's been set up with the regulator, which can be reused and to be able to report DORA incidents. Similar to what's going on with TB UK. So what the UK have said to us is, well, we want to know if our tolerances have been breached. So the P1 reporting process here, well, if you beginning of the incident, end of the incident, number of other aspects, data points, you can send that to the UK, and they can work out whether or not their tolerances have been breached or not. So a lot of what we're doing is just reusing what's already there.
No, it's very clear, Daniel. And I guess coming back to Keith Blizzard, right? And I'd be very interested, Keith, to hear from you from a legal perspective, right? Daniel mentioned the obligation on your third-party suppliers, right? And I guess I have two maybe not so quick fire questions, but a question we get commonly asked is, for the big strategic vendors like the Amazon Web Services, the Microsofts, etc., do they have DORA compliant clauses that can fit into your contract? Or, what is the situation with the biggest vendors? I guess that's my first question. And the second question, really, it ties a little bit, but I don't want to go into it just yet, is the risk proportionality. We all know, and no disrespect to lawyers, Keith Blizzard, that contractual changes don't necessarily happen in a matter of hours, etc. What would be your advice in terms of ensuring that a company's contracts get to a DORA compliant manner in an efficient and effective way? So I guess the first question is around the big vendors, Keith. Do they have DORA compliant clauses that you can slot into your contracts, or is that too much of an ask? Or is it too general?
Probably too much of an ask. Let me give you an example. Every contract has a termination clause, right, in it. But historically, the large technology companies dislike a customer having termination for convenience. For example, termination at will, call it what you will, or termination because the regulator tells them you have to get rid of this supplier, which is in the DORA regulations. And if you have ever spent any time negotiating technology contracts, you know that the big tech companies do not like to concede that point. What they're going to have to concede now if they want to keep supplying you under DORA is that you have to have that right of termination, particularly in the critical ICT service provider space. So they're going to have to accept that that goes in, but you also have to be a little bit conscious that that's quite a big ask for them. There are a number of clauses in DORA. If anyone is familiar with GDPR, particularly the Schrems to SCC, standard contractual clauses piece, was about putting 2 clauses into a contract to make sure that you could transfer data to the EU. A quick check to make sure you didn't already have them, and then an amendment agreement saying let's put those in, right? So it wasn't too difficult. Here, it is going to be more complex because you do already have parts of the DORA language in place, and you have parts that are not in place. So again, it goes back to our gap analysis. We have Johnson Hannah have a very sophisticated tool, by which I mean it's a really pretty looking spreadsheet, but effectively it allows us to do a gap analysis based on contractual terms against DORA terms of any given contract, and we use enhanced AI searching to sift through those and compare them. And you could do a rough percentage of how close you are. Historically, the big IT contracts were not particularly regulatory compliant. They were one size fits all very often. And sometimes you'd even find them just by reference to the terms and conditions on our website, which we were at liberty to change, for example. But for the bigger ones, the bespoke negotiated contracts, it was the financial services companies who pushed to have the terms in place. So I was I was reviewing for a partner firm of ours, one of their contracts with a large bank, a large global bank. And I asked the question, I said, this contract is actually pretty good. You're about 80, 90% of the way there. It was done just recently. Do you have a template for this? And they said, no, it was the bank that pushed all those clauses in. And that's actually a really sort of common story, right? So what we expect then is that what we think in the market is that, generally speaking, the technology companies are probably behind the curve where they should be in terms of outreach into their financial services customers, saying this is what we should do. What we've been advocating is saying financial services firms should go to their tech providers, particularly the critical ones, the ones on the top of their risk list, and start to have that conversation. They should expect the big tech companies to have a couple of pauses. Things like service level agreements are going to be slightly tricky to negotiate. Things like the right to terminate interrupt revenue flow. So they're going to have to do something internally. You won't just have a lawyer on the other side saying, yeah, that's fine, we get it. A regulation will give you a good wind in your sails, but it won't solve every single problem that the contractual negotiation throws up, right?
Yeah.
In terms of proportionality, you'll have to repeat your question, Keith, because I'm waffling.
I'm going to come on to that, and I did say that, right? But the second question, Keith, really was in terms of, right, and there's no one size fits all, right? But a critical step is making sure that your contracts, your third-party service providers are DORA compliant. What's the typical lead time, or what's a reasonable lead time if you have, say, 4 critical contracts that cover 75% of your critical business processes? What's a reasonable time frame to engage with your third-party service provider, etc., to get that agreed from I'd say, a start to finish? What's your experience in terms of timelines?
The bad news is the ideal time frame is a year.
Right.
You've got 7 months. The way you can maximize that is to do a couple of things. The first one is to do the analysis of your contract yourself. So actually do that gap analysis so that you can go to your tech provider and say, we've looked at this contract and we see 6 clauses which need to go in, which we need you to accept. We need you to respond on this, and we need you to respond by this date. Put it in the context of, imagine if there were 22,000 firms in scope, there were going to be 22,000 firms outreaching to vendors at the same time, all demanding attention. So my first piece of advice is to make it as easy as possible by doing the work yourself. Second piece of advice is to make it a conversation between you and say, look, you both know that we have got to comply with this regulation. And if you want to keep supplying the services, you have to comply with this regulation. How are we going to come to an agreement on these points? Can you tell us which points are going to be difficult for you? Can you tell us how long you're going to resolve them and when you'll be ready? If that conversation goes well amongst civilized individuals, you avoid a big protracted contract renegotiation, which you will potentially still be doing in the autumn. If the conversation goes well, hopefully your execution of the amendment or a new contract, whatever you do to be DORA compliant, will really be a formality. And the text that your lawyers are reviewing on either side is essentially the text that your customer-facing business people, IT operations people, project managers, etc., have agreed between themselves. And then to Daniel's point about the testing environment, which I think is a great one, if you can aim to get as much of this done by the end of the third quarter, you then have the fourth quarter as much as possible. And if you can't have a whole fourth quarter, at least, for example, November, December, to do your testing, to do your project management wrap up, to deal with your internal sign off and so on. So you've really got to put some effort into getting the contract population organized today, finding your contracts, reviewing your contracts, outreaching early, engaging your service providers with a plan of action, so that execution come Q3, maybe into Q4, is relatively straightforward.
Oh, it sounds good, Keane. Again, a very pragmatic approach, right? And I think we've covered what are the critical steps to become DORA compliant, right? We spoke about Article 8, making sure that organizations reuse what they have in place, right? Typically, we find from a CubeMatch perspective, that initial analysis takes 4 to 6 weeks. Obviously, once you've got the right experienced consultants in place, we've taught, and that kind of includes, I would say, in that scope, it includes a review of your ICT risk management framework, your policies and procedures, your incident response. Daniel spoke about your digital operation resilience testing. That could be pen testing, your critical applications, your attack surface, all of that, etc. And then obviously the fourth piece, not exclusively around this, but it is around your third-party risk management as well. And we are seeing in the marketplace smaller suppliers who financial institutions may not be their primary customers are going, this is really onerous. So I think that's just a shout out to a lot of organizations out there as well who may have a dependency on some smaller suppliers, legacy systems, etc. We're seeing that out there as well. But I'm just conscious of time, and we've 12 minutes left, and I want to kind of get through these two questions. It'd be great to share your experience on this as well. I'm going to ask this question first to Daniel, but from a DORA perspective, we're seeing, and I think all three of us, is fair to say, we've engaged with various stakeholders: legal, CISOs, CIOs, head of risk, head of compliance, etc. Who are the people looking to sign off on compliance for DORA? Where is this sitting in terms of an accountability perspective, right? Because the final question for me is, there is potential significant ramifications of non-compliance, right? And obviously not at least from a regulatory perspective, more so from a cyber perspective, reputational, etc. around that. But who are the key stakeholders that need to be engaged or that you're seeing are signing off? And again, it's not a one-size-all-fits question, but it's not, in my experience, it's not falling straight to one stakeholder. So it'd be good to get your views on it, starting with Daniel.
So what we did is we made it into a process, and I think that the point that Keith B made at the beginning is that there's a constant detailing of the RTS and the ITSs. So when you first did your initial gap analysis, you have to do it a number of times because more and more details coming in. So we looked at it as a process, and we had legal, who was they were excellent, and they did. So what they did is they said, this is our interpretation. This is who we think should do it. You get into the gap analysis with the track leads, and once they've identified that gap, we made all of the track leads go back to legal and say, this is what we've got, this is what we need to have, Are you comfortable that if we fill this gap, will you be happy? So then they went off, they did their thing, and every time ITSs and RTSs came through, that process was repeated to make sure that the level of detail was being handled and managed properly. Our legal was a real stickler, and then when they get to the deliverables part, we had an oversight team. So again, it was somebody from legal, same person, who'd tracked all of the requirements, and we also had somebody from operational risk management to say the way that you're doing it fits within our risk management framework. Eventually, what will happen then is that the senior managers, they've got to sign off, so they're the ones that are responsible, and you can have a number of senior managers that will be responsible for different aspects of the DORA and also of the operational resilience implementation. And at the end, it goes to the board of directors and or the EB, and they've got to sign off, and they're personally, we'll get to that in a minute in the fines, they're personally liable. So what we've done is we've made this process where there's quality checks built in all the way down to the final approval at a board level. That's the way that we've approached it.
Yeah, and Keith, two things that Daniel has mentioned, I'm sure people are aware of, right? But this sharpens the focus for any executive. You're personally liable, right? That's a significant change, and it's a significant, I would say, from a C-suite perspective, to make sure that you are compliant. Again, Keith, different stakeholders that Daniel outlined. What's your experience in terms of the governance and the ownership from a DORA perspective?
Yeah, the regulation is expressed. It's clear that the responsibility for DORA compliance rests with the board of the entity in scope. So two elements to that. First of all, the board are fixed with liability, and if you read Article 5 of the regulation, that sets out a number of responsibilities that they have. And then secondly, for anyone in a group company, it's important to note that it's the local entity. It doesn't go up to group level. So if you are a financial services company in the EU with a license from an EU financial regulator, that's the entity that absolutely needs to comply. The interesting aspect of it that makes it varied, no one size fits all, as you mentioned earlier, is that every company has a kind of different structure, and Daniel was mentioning there are lots of different kind of chiefs in that. I think you are one really good question to ask yourself at the very outset is, what does compliance look like for us? Okay, so first of all, identify actually who will answer that question when the Central Bank of Ireland calls the firm and says, are you DORA compliant, right? It could be, for example, your chief compliance officer, your head of risk. It could be something for your risk and audit committee. It could be something for your board. But that's the question that you've got to ask, actually, who is going to make that statement? And on what basis are they going to make that statement? So in other words, what do they want to see so that they can comfortably make that statement? Because you can't put one of your senior people in a position where they're saying something that isn't true, right? So you're obviously going to want to see that the RMF has been completed, that there's a list of contracts completed, that the IT operation and testing has been done, and so on. But actually, they might go for even more granular detail, which is, well, show me the checklists, show me the exceptions, show me the things that you still haven't done, because I know I'm going to be grilled on this. So therefore, you need to communicate to me anything that's outstanding so that I can make that truthful statement. One possible scenario for this, we know we have different levels of regulatory interaction. So if you're a large global bank, a systemically important institution, you have regular supervisory conversations. Expect the supervisor to ask, how's it going, on a regular basis. That's a feature of the FCA's work on off-res as well, for example. But if you're one of the smaller firms that doesn't have direct supervision, you may not actually even be contacted. If there are 22,000 firms in scope, you probably might not even talk to a regulator. And actually, the point at which you have that conversation could also be the point at which something has gone wrong, okay, which is not the best time to have a conversation about your lack of compliance.
No, absolutely. Keith and Daniel. And I guess just around the lack of compliance, Keith, from a legal perspective as well, what are the fines from a DORA perspective?
Well, they've got to be, the regulation company puts them, for national regulators, but the talk that I'm seeing is around 2% of global turnover, or up to $1 million per individual fine. So it's kind of like GDP style, not quite as high as GDP, but GDP style levels, which is quite significant. But there's also some variants that you and Daniel have been kind of hinted at as well, which is that the individual responsibility is there, obviously, in a DORA fine. But also, if you look at, for example, the Irish jurisdiction, you have the individual accountability framework. You have the fitness and probity requirements, so that if you're in a pre-approved control function or a control function, that can impact your status. For example, you may not get that, you may get that approval taken away. It could actually, a significant failure of this kind could go to the viability of your license to act as a financial services firm, either partially or fully. There's a couple of the two scenarios in which this is likely to come in are incident and non-incident scenarios. So non-incident scenarios being something like a supervisory review or a self-declaration of non-compliance. Nothing's happened, but you've fessed up to the regulator that there is a failure, for example. Incident compliance is obviously the worst case scenario, and there's potential there for complexity and also a lengthy kind of investigation period. Take a scenario whereby you have a critical service provider that fails, which causes your firm in turn to fail. Maybe there are a few other parties involved as well. That critical service provider is governed by the European supervisory authorities under DORA, the new regulation. You are governed by the Central Bank in the Netherlands or the Central Bank in Ireland. You've effectively got a joint investigation of two regulators crawling all over everything you've done, probably asking you for a lot of lengthy reports, feedback. When you've identified the problem, you've got the question of assigning responsibility, blame to the extent, if they're talking about fines and sanctions, for example. But you've also got the problem of remediation and continued oversight, for you for at least probably the next 12 months, as well as questions like damage to reputation and possibly even levels of individual customer redress. So I think the message from this is obviously nobody wants non-compliance, but the thing you really don't want is non-compliance revealed by way of an incident, I think would be the worst case scenario.
No, definitely, Keith. And I'm conscious we've only 2 minutes left, right? And the final question, maybe 30 seconds each, right? We have had, lots of conversation, good conversation today on DORA. If I'm a smaller financial institution, I'm only starting to look at DORA now. And Keith and Daniel, you kind of highlighted at the start of the call around risk proportionality. 30 seconds, risk proportionality. What would you do if you're starting from scratch?
Go, Daniel.
I think danger of kind of repeating ourselves. If you've got something like ISO 27001, if you've got some kind of assurance going, dive into that and make a direct comparison between your assurance level and what DORA and DORA operational resilience is asking of you. Gap analysis, and then just attack the things. Make sure that you've got the basics done. And as Keith B said, hope you don't get an early visit from one of the regulators. Sums
it up quite well, Daniel. Keith, anything to add on that before we close the call?
If there is a firm out there who's absolutely done nothing, scope, I think is absolutely. Start with Article 8, which says you've got to identify your ICT. You've got to identify those against the business services, and part of that is identifying the contracts in scope. Do the gap analysis, identify the regulations that you do currently apply with, and look at how much they help you, what you think your lift is. Try to assess it on a percentage basis. We are 60, 50, 70% away from compliance or whatever. Consider your resources as early as possible. Can you do this internally? Do you need external resources? Get resources sorted as quickly as possible, then go into the detail, and then you can see how well you're going to perform over the next 7 months.
And one last point, Keith. One last point.
Go for it, Daniel.
have an improvement plan that you're going to implement after January. If you're not there, make sure you can show them that you know where you're not complying and that you've got a plan to tackle it. Improvement plan, really important.
Great advice, Daniel. Guys, and I'd like to thank everybody for joining today. Unfortunately, we couldn't take Q&A because we'd only 45 minutes, but if anybody watching has any questions, please don't hesitate to contact myself, Keith Blizzard, or Daniel Crawley. It's been a pleasure speaking to the two guys today. And before we join the call, just to finish on a lighter note, because there's a lot to cover in DORA, Daniel was comparing the artwork in my background to a Dutch artist who was approximately 2 years old. So Daniel, I'm interested to see that. So thanks everybody for joining. Great conversation. Any queries, let us know. Thanks, guys.
Thanks all. Bye-bye.
Cheers.
Bye.